All right, welcome back. So what is a trading setup? I want to answer that and then walk through the whole thing step by step. A setup is a set of conditions that come together in a particular way. There are conditions, just like a weather event. There'll be a set of conditions that come together to produce the weather event. It's no different with a setup. So the first thing we have to do is define the conditions. Now what we're going to call conditions are the components of a swing cycle. So once we can be able to recognize and isolate those components, we can see when they arrive together in a particular way. Now we don't force them to come together in a particular way, right? We just recognize, we have the ability to recognize in price flow that they are coming together in a particular way that offers a certain probability of it doing one thing over the other. Now a setup is just part of the process, and this is a bit of a preview to some of the new things we're doing at the site. For instance, people have been asking me for years to build some courses, and so I'm in the process of that. I understand, right? We need to take a lot of information that is out there, but structure it in a condensed fashion that we can follow step by step. And that's what a setup is. Something that you can identify and follow in process step by step. Traders are always asking, right? What are we going to be patient for? We're supposed to be patient. Well, this tells you what to be patient for. The conditions lining up in a certain way. And a setup can be anything. An effective setup will follow the market. Okay? But just by learning these two components today, it's the means for a lot of different setups. But an effective setup will follow the market, not predict it. And it'll use inherent things in price flow. It's a way of framing what looks like gobbledygook here, right? A lot of information, so you can understand it and make some decisions and be able to do something in a consistent way in an uncontrollable environment. We can make a moving average as a setup if we wanted to. For instance, here I'm going to put the 50 and the 200. And notice how this all of a sudden frames the market. There's no magic to this, no secret numbers. And we can say, all right, we want to sell the 200 and keep selling it until these two moving averages cross, right? And then we have a process we can follow. And then if it turns, we want to buy the 200 until they cross back over, right? That's the beginning. See how it frames things up. And we can do that with market structure components. Once you have a way to frame the market up, right, to take this information and map it, you learn within that frame, right? You begin to see details rather than being overwhelmed by so much information. So we're just going to learn two components of a swing cycle here. A gap impulse and a shelf. And what we need is the ability to recognize that on a chart. Something to make these distinctions. And in everything we do at Language of Markets, right, we're going to make it as objective and simple as possible. We want to be able to define these things so we can see it, so anybody can see it. So the very first one is the gap impulse. The literal definition of an impulse is a sudden spontaneous inclination or incitement. All right, so it's impulsive, it's taking something out, it's moving, it's showing that the market is now in play. And as traders, we don't want to get caught in the noise. Wait for something to be in play. That begins to set something up. We identify this. And what we're going to be looking for in this impulse is that it's steep, it's strong. You'll see, like in this chart, right? You'll see the bars. Price is going up, but it can go up in a lot of ways. For instance, price is going up here, but you should be able to notice the difference in this going up and this going up. So a strong impulse will have some characteristics. There'll be higher highs and higher lows usually. They'll be closing on their highs, opening on their lows. They'll be moving like that. And we can have the ability to see that in price. If you notice, every chart I have on here today, there are some similarities. And just practice looking at them. So this is a stock. This is the Aussie yen daily, and you can see the impulse here. Boom, 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 boom. It's strong, right? You see the steepness of it. It's defining a condition for a setup. You can see in the 240 pound. And going down here in the CAD, right? Look, the bars, right? They're not overlapping much. They're going down very fast. And in this week's New Zealand, so that's the first part, is being able to make these distinctions in price flow. And you know, when you begin to frame this way and ignore anything else, you know, you can then focus. You see details and things that you never saw before. All right, so our conditions, just like weather conditions, are going to be gap impulse and shelf. So that's the definition of a gap impulse. It's an impulsive move that's very strong, very steep. Markets in play. You can see there's a difference in this and in this. It's taking something out, right? It's taking something out over here. It's taking something out to the downside. It's taking something out. Boom. They're showing you something. Now the next component's easy. It's a shelf. Generally, after this excitement, price will slow down. And the shelf is going to be a minor place of support or resistance. And you'll know it's a solid shelf by seeing it test, 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 and bounce, right? So there are some ways to identify the shelf: the test, 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 and bounce. Now we're not making conclusions. We're not saying it should do this or it should do that. It can do anything it wants from here. It can push off of this shelf. We're just developing the ability to recognize it. You see it go up, see it start to slow down. I call this a gap slide. And then you can see it hit, hit, and bounce. So we'll just practice on each one of these charts. It goes up, starts to slow down, and there are supply-demand dynamics going on. We're just watching what they're doing. They can do anything they want from here. Right now we're just working on the ability to recognize it. So we have an impulse and we have a shelf. And the shelf is just minor resistance or support. Now, if we're to follow this setup process, right, we're going to follow. It has to do a few more things. It has to, number 3, wash the shelf. That means come back through it and make a new high. Okay, it has to wash it. That's banging down and make a new high. So if we watch this, you'll see what happens when the shelf gives out. The bars will often get bigger. This helps you confirm, right? You got a decent shelf. The bars are getting bigger. They're stopping out. They're coming out. It might wash, it might not. We're not trying to predict what it will do. I'm showing you the characteristics of a solid place of buyers and sellers. So when you get several tests, comes back through, and if it hits here, it's a bonus if it pulls back, because it's telling you this is a solid level. Okay? And then when you make a new high, what we're looking for is to lean back on those tested guys that had effort reversed. Okay, that's the last part. I'm not going to go into too many details, but if you can map this, you can then make observations on your own. You don't have to believe anything. Nothing works all the time. This has certain conditions where it's more susceptible to flowing, but you're literally using the buyers that are here. They just let them out. Boom. Okay, so let's look at some examples here, like in New Zealand. If we follow this, we have impulse, shelf, and then notice, right, look how they come out. Zoom, we call that a zoom. See how they test? So this is telling you this is a solid area, a significant area of contention here, right? They dropped it from here, boom. And if they make a new high, what we're looking to do is just like this. See how this fits the model. Okay. So what we're doing is reusing a shelf. We're just using, dynamics of price itself and finding a true level of support. The new high will confirm its intention. Okay, the new high confirms its intention, to keep going, and confirms that, hey, we just had a minor shakeout. That's all. We just had a minor shakeout. And I'll just follow it through on several of these examples. Pound, shelf, crack, new high, back to shelf. Aussie yen, we have this beautiful shelf, retest confirming the shelf, come back through the shelf, and this is live. So the process isn't complete yet, right? But it's easy and relaxing to follow in real time, because what's the next step of the process, right? That's the deal with learning something and following it. 1, gap impulse. All right, we got that. 2, shelf. We got that. 3, wash the new shelf and new high. Not yet. Okay, so it's easy enough to see that, well, we're going to wait for a boom and then a, whoops. We're going to wait for it to boom and come back. We'll be able to watch this one live. And the same with the CAD. This one's live. You can see it in process. Boom, shelf. We need to wash the shelf, come through. And this is very good for reading a market. You can just keep following. So here's a swing, and this is what a swing will go through. Shelf, crack, boom, new high. Slow down, crack, new high until it stops, right? Crack, and then when it stops, right, we follow it the other way. And we're just able to frame a market with a swing, right, with a simple swing. The swing has components. So we have the CAD to watch live, we have the Aussie yen to watch live, and there's 1 or 2 stocks in here. And you'll notice that, the stocks I'm looking at are all strong stocks. Okay? I'm not guessing at the bottom at anything. I'm playing in a strong environment. So just to be able to recognize a strong impulse, see the shelf, see the test, see the crack, back through after a new high. This one doesn't have as nice of an impulse, but you can see a shelf here, right? Boom, boom, crack, right? That tells you that, hey, guess what? Your support and resistance isn't at highs and lows, right? You look for the meat of the move in here. And then with some intention, there might be a possibility of us leaning back on this again. We'll see. All right, so that's it. That's the lesson. It's just it's literally just two components of a swing cycle. And with these two components, if we can make the distinction, then we can work with it. Right? All you need is the ability to make it, and you can go back and test it. So that's what a setup is, a set of conditions that come together, and then we're just working with swing components. We're requiring the impulse to be strong, and then the shelf to be washed and made a new high. So that's a little preview of how we teach and what we do. Define things, objective as possible, be able to follow them through process, and be able to do something consistently. And again, the setup is just a small part. Whatever you do, be able to define what you're doing, whatever your setup is, or whatever setup you learn. Make sure you can define it objectively. Make sure you can see it and define it. You're not making it up. And once you can do that, you have the ability to see it under all sorts of conditions and market cycles. All right, so that's it. We'll wrap that up there. Thanks for your attention.